Welcome in this podcast, Growth Factor. Today we are talking with two experts about one of the phases of an enterprise and company. We are talking about private equity. So when you buy a stake in a private company and you hope that you will increase the value of your stake in that company. And with me we have Ignace de Beus. Welcome, and Marjorie Lapras.
Thank you.
So tell me a little bit more about you. Marjorie, you can start. Please
Sure.
Introduce yourself.
Thank you, Valerie. So my name is Marjorie Lapras. I'm a manager within the corporate finance team at Aurelius. Been working with Aurelius for about a year. Before that, I started my career in France at HSBC, it's also a bank, because I'm French. Moved to the Netherlands about 2+ years ago. Worked as a debt advisor within PwC before moving to Aurelius, the corporate finance team. To give you a little bit more of an idea of what we do, we're helping in the M&A process to raise any new acquisition for any new investments that we're looking to do. And we also help within the investment period with any of our portfolio companies, any refinancing, financing. So we support the management team, the CFO, and the finance team in all those topics.
And what about you, Ignace?
Hi, I'm Ignace de Beus. I'm head of what we call the large and international corporates department. So we combine both sales and relation management for that type of clients. So what we do, actually, we serve the Belgian corporates, but there are not many corporates left anymore. And then for the surrounding countries, if they need what we call pan-European solutions, so involving multiple jurisdictions, we have the experience to do that. And then besides that, we are also, since I think quite a few years, specialized in what we call LBO transactions. So serving private equity companies, raising money not only for working capital purposes for the target companies, but can also partly or entirely be used for the acquisition itself.
So what's LBO?
Yeah. A good question. It's what we call, it's a general definition we use for leveraged buyouts. So, in the frame of the acquisition, but mostly by genuine private equity companies, really within their strategy, like you said in the introduction. So to buy companies or carve out of companies to increase the value of the company.
All right. Now, Marjorie, you work for Aurelius. Now, what are the type of companies that are in the scope?
Sure, maybe coming back one step, Aurelius is sort of a pan-European alternative investment firm. So we're focused on private equity, but we also do private debt and real estate, so a very multi-asset strategy. And we have a particular focus that differentiates ourselves, that we work on improving operational excellence, and that's really sort of our core focus. And to do that, we have an operational task force of more than 140 people with some specialties, also sort of IT procurement, sales, that enables to accelerate value and build growth within our portfolio. And in terms of office, I mentioned pan-European. We have offices in, of course, Germany, Munich, and the UK, so London, and just to mention a few, Amsterdam, where I'm based, Stockholm, Milan, and other places. So very pan-European. And to mention we have a full list, but to mention only two recent transactions. So we recently sold Distrelec, which is a European B2B distributor of electronic and technical components, also quite pan-European investment. And we recently announced the acquisition of LSG Group from Lufthansa, with a very global presence and more than 2 billion in revenues in US dollars. So quite sizable investment.
Absolutely. So you mentioned M&A, mergers and acquisitions. How is the market of mergers and acquisition evolving right now?
So I think in our space, which is a bit different because we focus about 70 to 80% of the transactions we do are carve-out deals. So we acquire from a bigger company. It broadly mirrors the overall M&A market and what's been happening in the overall M&A market. And we've seen quite a big sizable, good level of deal activity, with an increasing amount of deal flow now post-COVID, and with all the questions, corporates are coming back on their strategy, starting to evaluate what is part of their core strategy, what is no longer a core part of their business, and they have a bit more time to sit in the boardroom to be able to make those decisions. So we see that activity picking up a little bit, and that they've had time constraints with COVID, all of the pressing, urgent questions that came, but you were not able to take longer-term decisions. We see that coming back a little bit. So we expect market to pick up even more and to see more stability returning in that sense in the M&A and the number of deal flows of deals coming to the market. So we also see specifically for Aurelius that our pipeline becoming more full, so with more and more transactions that could be of interest to us. And of course, all the corporates with COVID, there are new questions with inflation, increased costs, but you have to make strategic decisions where you want to go and find that path. And more also with higher interest rate, financing has become more expensive, so you also have those questions, how do you finance? In the typical LBO world, what you mentioned, leverage buyout, this is becoming more of an expensive instrument where it was quite cheap for a long time. Therefore, in the large cap LBO space, it's a bit different, but that's also not where Aurelius typically plays. As mentioned, more 70-80% of our deals are corporate carve-outs. So we see that returning, stabilizing, a pipeline that's growing, and we're confident that we can execute and complete a number of the deals where we're involved in.
Very exciting.
Yeah.
Yeah. Now tell me about factoring. How do I see factoring in private equity? Or how is financing done and those acquisitions? Because that's really complicated for me.
Maybe I can start and feel free to add. So initially, when you look at it, it's a mix of debt and equity. So the sponsor is going to put a bit of equity from its own money in a way to simplify. And usually you try to also raise debt. In our case, as mentioned, we look at sort of that operational angle that we want to bring. So we'll look more for operational financing and not the typical acquisition financing, which comes into that LBO space. But coming down to mixed equity debt, then the ratio of equity versus debt is what is going to finance your acquisition in a way, if you come back to the basic. And again, sort of in a carve-out situations, because of the operational complexity and you have a structuring that comes into play, the typical highly financial engineering that can take place doesn't work as much. That's where factoring has worked really well for us and a lot of our portfolio companies. And it's easier to implement and works well with that operational plan that we want to put into place, breathes with the working capital and breathes with the company. So in the first phase, that works really well. We don't have perfect visibility on what's going to happen in terms of your plan or in terms of bringing that operational plan into force.
Yeah. If I may add, what we see in evolution since we started, I think it was in 2015 that we really had a strategy for private equity companies. But before we received questions in the past, and we did some transactions already with private equity, but without real strategy. But there's an evolution. While in the past it was also used for the acquisition, but we see that today those players have deep pockets. So there's a lot of, or there was a lot of, it's more for Marjorie to acknowledge, yes or no, that they have deep pockets. So now it's more used really as a funding source, working capital for the target companies, because these companies traditionally are a bit more leveraged, or the shareholder at least is a bit leveraged. So for them it's sometimes difficult to access the normal financing market. While if there are good assets, it's a good reason for a factoring company to be there and to finance. So.
And which companies are you talking about? The ones that are using it?
Well, private equity, perhaps going a bit back, is that because factoring, for us, of course, I sell factoring. For me, it's the ideal financing, but in all honesty, it doesn't fit each and every company. So what we usually do when we are approached by a private equity company, already in a very early stage, we receive some information about the business, and thanks to our market knowledge, we can already, because some transactions or some companies have what we call a factual business, so we can do business with them. Some companies have less factual business, so it makes it more difficult. But thanks to the knowledge, even with limited information, we can already give the private equity company kind of indication. But our client in first instance is the private equity company. And then in the second instance, but in the end, is of course the target company that becomes our client. But of course, first discussions are done with the private equity company because they are not sure yet that they are going to win the mandate or that they will become shortlisted for the transaction.
All right. Now, how hard is it to implement it?
So maybe I can speak first, and then from your perspective, Ignace, you can also add. It's in a way not a difficult financing because it makes sense. It's linked to the asset base, so it's quite understandable by the different teams. But it's also not very well known. So there is a part of education process that needs to happen. In terms of implementation, I think it's more you have a full phase before actually implementing, signing, and being able to draw on your facility and having your loan in place. And that's where it can take a bit of time because that information is just not readily available or is new. You need to extract it from the system. So you have a whole IT and operational setup to be able to get the right information to come to the right terms for that factoring. Because you have a full asset valuation process where you go really into the details. Are there any reserves? Is there anything that we need to take into account? Is it factorable? So what Ignace already mentioned, does factoring really work? And then for the full portfolio. And in itself, that process can be quite fast. It's just getting the information because it's not well known or it's not part of a typical package that you get. That takes a bit more time, and maybe just adding in the M&A processes that we work on. Before signing the deal or being exclusive, it's difficult to get that information or get the ledgers with the debtors, the names, because first of all, it's confidential and you haven't signed anything yet. So the seller, which is understandable, does not want to share that level of detail. And it's also not typical to have a factoring implemented, so the advisors are not used to those type of requests. So they're used to other requests relating to the financials, but just the ledgers and all the information that you need to understand the portfolio and what factoring would look like. That takes a bit more time. So what we've seen from experience is usually it happens, we can get the right information, so we get an idea and we involve our partner and our lenders, and in particular BNP, quite early on to get an idea and see what we should be aware of, what we should be asking for. But it unfortunately is after you've only been able to sign or that you have that kind of exclusivity with the seller, that you're able to access the right teams and access the right information. So it takes, in that sense, quite a bit of time. But from closing onward, it's really a collaboration with the lender, and it flows faster. So in comparison to other types of financing, you have more work beforehand, but once it's implemented, you've signed, and day one you can draw on the facility, then it's more sort of an automated process.
So what time frame should I think about?
Yeah, but that's rather difficult. And like Marjorie mentioned, but it's not a real issue. The problem we have is that when they start talking about an acquisition, the information they have is more like historical financial data or budgets, etc. But there's no real information apart from the size about who the debtors are. It's all on a no-names basis. We can't see any contract with debtors. So the information, the detailed information, that's something that we don't have, and that is something that we need to make everything binding. But luckily, until now, we have always succeeded in, because we have 1,500 clients, so these are active in different sectors. So when we are approached by a private equity player and they want to talk about a transaction, and we know the business, then we already can anticipate certain issues. We know what is factorable, what is not factorable. So we can already, as from the start, give a very good indication. So to give a bit of comfort to our client, which is in this case the private equity player, but like Marjorie mentioned, the tricky part is that you only receive, so they are working on a non-binding offer. We try to reassure them that we know the business.
The risk.
Yeah, but then it's the moment they are selected that we receive the detailed information. So, but each time it has been confirmed. So, and we try in our client portfolio to check, to see what could be possible issues and to anticipate and already launch some questions to the private equity player to see if they already can retrieve certain information. But it's quite difficult because there are also other candidates for buying the company. But yeah, it's
also a learning process. I think from the relationship and the experience with BNP, that what Ignace just mentioned, being able to check with other similar companies so that you get an idea, but you always know that unless you're able to check the specific details and that specific information, it's all based on research. And I mean, so far it worked quite well that we get the right indications, but indeed for the situations that we're in and the investments that we make, that works well because we always have some time between what we call signing and closing of a transaction so that we can get that information, finalize the terms, and discuss also with the lender. But it's really sort of a long-term collaboration that you get to that point where it's mutual trust and the information that we get and the sort of indication that they give us subject to that or that input.
Yeah, indeed.
Let's have a look at the benefits. What are the benefits for using factoring?
Sorry. So I would start maybe the first one. It's not KPI focused versus sort of a cash flow lending. It's based on the asset. So it really breathes with working capital, with sort of the asset base of the company. So in a way, easy to understand, and you have an idea how it's going to evolve. So from that point of view, and the investments that we make, we usually have a very sort of strong, clean balance sheet. So that works really well for a factoring solution to implement it day one and be able, again, to do that, implement that operational transformation that we at Aurelius typically do. So it's a good starting position and good starting financing. It's easier for the teams in terms that you don't have a 200-page documentation, so you have quite a lean documentation that is understandable by most management teams, even though they don't have extensive experience in debt or different types of financing. So from those angles, also offers quite a lot of flexibility, easier than other types of the financing. And we try to get them involved as soon as possible that they actually understand what type of a packet they're getting.
Well, perhaps one thing, if I may add, is that what we also have learned during the process, because we are in constant contact with Aurelius, for instance, but we don't have any contact with the target company. Mm-hmm. So they are not aware of the potential solutions that will be used for their working capital facility. And sometimes they are banking with BNP, but sometimes they're also banking with others. So for them, we are quite new in the process. What we do now, as from the start, already, we try to organize with the target company, with all people involved, controllers, IT, finance people, a meeting to explain how it works and to take away any negative feelings that may exist, and it helps. So that we can really, that we are there to help them, and it's trying really based on how they work to try to find also convenient solution for them to implement. It's not that Aurelius has decided we're going to put factoring. In the end, they will have to follow. But on the other hand, we also need to take into account the wishes of the company, because they will be responsible for the day-to-day operations of the factoring program.
All right. Now, you talked about 1,500 clients, Ignace. Yeah. Do you have a lot of experience with private equity?
Yeah, if I look at the transaction that we did the last couple of years within large and international corporates, I may say that practically half of them were LBO transactions or involved a private equity player. So it has become rather important for us as a business.
All right. And then at what moment do you enter the conversation involving factoring?
As soon as possible. That's the reason why we are in constant touch with the private equity players that we know, like Aurelius. As soon as they even think about a certain transaction, involve us from the start. We're going to already look without giving any sometimes we try to give already an exact amount, but about the factorability, which is quite important for us because we are a factoring company. So to have a view on the assets, and we also, sometimes it's negative. Already said from the very early start, we know that business is not something that we can do, then it's a no. So we try to be transparent as from the start and during the whole process. So, and if we say yes, then in the end, we will have to perform.
I think if I can add, from our perspective, it's really, again, that relationship, and we try, if we want to go the factoring route, we'll involve Ignace and team or other lenders that we work with as soon as possible, because they have that market experience, they have other companies that are a bit similar, so they're able to tell you those are sort of red flags, or this is very factorable. So we always have an initial dialogue, even early on in the process, just it might still be always under confidential basis. Is it factorable? What do you think? What type of terms would you see? All that non-binding, again, because we don't have that level of information. But again, as soon as possible is probably the right answer, to get an indication and then follow the route, understand what the requirements would be to get the right information as fast as possible too.
Sometimes the information that we receive at the beginning is very rough. So it's only about the activity, and then it's going to be because not all transactions that they are studying will materialize in the end. So it's a bit of both.
So from our team, corporate finance within Aurelius, we do that pre-check and analysis, and is a good factoring route, and then work with our partners and Ignace's team, for instance, and check early on, is that an option? What do you think? And what would you need? And then if the conversation continues and we progress in that process, in the M&A process, they've already been involved early on, so they already have an idea of what to ask and what you need to get to implement in the end, to go all the way to implementing and having that facility in place day one. And even further, actually, because we don't stop discussions when we close, so we keep going on with that dialogue and adding other countries. So it's a constant discussion with our lender.
All right. Ignace, you told us that you don't have any contact with the target company. So what if they say no? Or can they say no?
That until now we never had the situation where they said no, because in the end, for them, as from the start, they are happy with the solution because it gives them the liquidity that they will need to perform to continue their business, and that's exactly the reason why. Because for them we are a new party, and that's something that we always try to anticipate, is to have a first meeting, explain everything to each and every person that could be involved. There are certain inconveniences, we know, but we really try to help them, to onboard them, and that's really appreciated by the companies themselves.
All right. And if we reverse it, the target companies, can they come to you and say, we need private equity, or we would like to have private equity? You have maybe some candidates who might be interested in our business?
That's a bit of a different market. That's more business for the bank. What we see is that companies that will be taken over, that they try to clean up their balance sheets or to improve their financial performance, that they start using factoring in advance. But if it's really companies approaching us in the frame of an acquisition, that's more for colleagues of the bank who are responsible for M&A activities. Thank
you very much. And then I have another question, because you are operating on an international level. Is it tailored to clients, to partner? How does it work? You work in the Netherlands, in Germany, I've heard. BNP Paribas Fortis Factor is around in Europe as well. How does it work?
It depends a bit on what the client wants. If they have a really centralized structure, so we can do out of Belgium practically all jurisdictions in Europe. So it means that if you have selling companies, or rather invoicing companies in multiple jurisdictions in Europe, we can practically serve them all. But if you have a really decentralized structure with a treasury department in different countries, we can also offer a multi-local solution. So it means that the Belgian entity will sign a contract with the Belgian factoring company. If it's a UK subsidiary that wants to do factoring locally, they can sign a factoring agreement with a local BNP factoring company. And if they need normally they require a kind of coordination, it can be done out of Belgium. So they're coordinating the whole process with the other entities. So there are different possibilities, but that's also part of the job. What does the client wants? How are they organized? And then we try to structure the most convenient and appropriate solution for them.
If I may add, it's also, from our perspective, it's quite, we invest in sort of pan-European companies, but with global operations, so some of our portfolio companies are very global. So we always try, what can we achieve in full closing, having in place for closing. And we always have a constant dialogue afterwards to get what other countries could we have, other jurisdictions that work well, we could implement and include in the factoring. And because we're in that carve-out space, you usually have some cleanup that is done up until closing. So those cannot be done on day one. So then you keep, and we've had that with a couple of our portfolio companies, you keep that discussion open, saying, well, there might be that additional country that we want to look into. That's where the presence of BNP or other lenders, that international global presence is very important. Because the more liquidity, we also have a look at, does it make sense? Do you have enough of a ledger for a factoring solution in that country? Or is it not relevant? So that would be the first question. And then again, always have a quite open dialogue. What do you think? What's your presence? What would you say the minimum threshold is? And from there, try to say, it's not that you have, most of the time, not a fully finished package at closing. It's a growing facility, also grows with any M&A or add-on that we want to do if we have a sort of a growth expansion story. Whenever we acquire a new target, is it possible to include it also in the factoring? So it's, as mentioned, grows with the company, which gives it that flexibility to follow the path, be it sort of organic or international also, or any sort of add-on and inorganic growth that you might have as part of your plan.
So Marjorie, what is important when you are looking for a partner to implement those factoring solutions?
I would say sort of 3 points. The first one, deliverability, and we've touched upon that. We want to be able to rely on the initial terms that we received, knowing that we don't have that full package information, and having a strong support team from the factoring provider that worked really well with BNP so far, and we hope it continues. We have a dedicated teams there to support the management and the IT, the setup, being available to answer any questions, because it's all new most of the time to them. So that's very important. Another point is the internationality of the factoring provider, being able to have all those jurisdictions, also good to increase your factoring availability and have more of a global financing instead of just local solution. And the last one I would put within sort of a banking group, the fact that you have a cross-offering. So it's not only a factoring solution, but you're part of a BNP as a group. So there are other services that can provide accounts, other FX services and so on, very, very important for management team and the treasury and finance teams.
Thank you so much for joining me, Ignace de Keyser and Marjorie Lapras. And I remember from this episode that when a private equity company acquires a stake in another company, well, actually, they can use factoring as a flexible financing process. And when they put all the stakeholders and everyone who's involved together and they acquire the right information, it can all run smoothly. Thank you so much for joining us. If you have any questions, please contact BNP Paribas Fortis Factor. And I will see you next time.